U.S. futures shrug off Spanish downgrade, pushing higher at this hour. With weekly jobless claims, trade deficit data, and import prices ahead for investors, along with a handful of earnings. Can the market build on the morning gain? I'm Taylor Schranz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with theStreet, and together we bring you the Morning Call Express. It's been a really interesting week. We've been under pressure for Monday, Tuesday, Wednesday. We're up about 5.5 handles now with some commentary on Spain, and we also have Citigroup equity strategists taking up their outlook to a more bullish perspective through the end of 2013. So it's kind of a lot that we have to figure out, especially going into JP Morgan and Wells Fargo commentary tomorrow.
It's all how you enter and exit the trade. Last Friday, he had the jobs number. We gapped up, went to 1470 and failed. So fast forward, about 4 days later, going into yesterday, we're down almost to 1430, 40 handles off that move. Question is, how'd you do it? Did you chase on that Friday and sell yesterday, or did you trim some longs, get stopped out of some positions as technology started to, to weaken in order to reposition for what could be a sustained move? So at this particular point, I think you have to have kind of 1 foot in, 1 foot out the door. That's what we've been doing.
Right. So we had the unofficial kickoff of earnings with Alcoa on Tuesday, but I really don't think that's what counts. Everyone is going to be focused on JP Morgan and what Jamie Dimon has to say, as that really is a barometer for the market. So how are you positioning yourself going into that tomorrow and really for Q3 earnings?
Well, yesterday, finally, the market also hit oversold levels. Same way we were plus 60 when we hit our highs. We were about negative 50 on my oscillator going into yesterday. And also, in the past 4 days, we've had enough technical damage that IBD, which I do follow closely, put the market in actual correction. So at that particular point, usually we're ready for a bounce because in order to go into correction, you have to be that oversold. So if you look at the chart of the S&P, you will see, if you've been a macro investor, you obviously have nothing to worry about with 300 handles higher, and all we've had is a minor pullback. We're only like 3% off the highs. If you're an intermediate trader or a trend watcher, you watched us break this accelerated trend. When we broke this, when you had this failure Friday, we closed on our lows here. This was your area to get out. So coming into the 50-day, that's an area to try. So I do think that traders will be seeing what kind of bounce do we get. If this is an oversold bounce that's feeble, that can't get any legs, the bears are probably going to protect this 1440 area and not want the market to reclaim 1450. If this was just a pullback for what Citigroup's saying is going to be a move higher, and like Goldman Sachs at 1575, I think that we will reclaim this area quickly. So I think the next few days going into JP Morgan will be key.
We're going to take a look at the ag space for the sector spotlight, in particular the fertilizer stocks, which is my 2012 pick. We have the WASDE report at 8:30 a.m. Eastern today. You're going to see some volatility around that. It's almost like when retail stocks go through same-store sales each month. This is a very key report for that group. They've been under pressure for Q3. Q4, you have that seasonality trade. Let's take a look at the ETF for the sector. Moo.
Well, this one's pulled back control just like every other sector. It's not showing you relative weakness, but it's also not showing you relative strength. If you see this controlled pullback, it too is trying to hold the 50-day. So it's not so unordinary after a huge move like you've seen since June, going sideways, consolidating, it definitely should be, you could stay with this, but in order for this to get back in motion, it's probably going to have to start getting back above 52. And within that, once the move starts, you look to some of those leaders that you always talk about.
Moving along to the trenches, we're going to take a look at some of the restaurant names, including Yum, C&G, McDonald's, and Starbucks. There's been a lot of activity in these names over the past couple of weeks. Let's take a look at McDonald's. Everyone. Okay,
well, let's start off with Yum, just because they're the ones who came out with good earnings yesterday, and they couldn't sell it off, which is always a positive side. We talk about good earnings. If they don't sell it off, it's not priced in. You look at Yum right here, you will see that we now have a new level to trade against. It was in this channel, gapped up above, held there. So I think as long as it does some work above this like 69 area, I think that you could stay with this trade and maybe add at some particular point when it takes out yesterday's high of 72, like you wanted to do is look at McDonald's. Not looking, as bad as it was earlier this year, but, with maybe some optimism around, Taco Bell and all the fast food chains you have within Yum, it could see a move, and I think that some resistance is coming into about 94. It's above the moving averages, so it's acting a little bit better. And to wrap up the Morning Call Express, let's take a look at Apple as it held a really key level yesterday. Well, we finally got that bounce. We talked about the 100-day moving average. That was around 622. It went to 623.5 2 days ago, tweeted about buying it below 625. Then it was an ad yesterday, and now it's going to potentially fill this gap on this up open. So if you look at Apple right now as a trade, you know, a lot of guys entered on this day, a little bit of follow through yesterday. I do think though, you know, it's going to have some resistance anywhere between 650 to about 656. So if you look at it short term, this is probably a spot that you would sell for the active trade, and this is where some guys might even try and reshort it. I know it's Apple, hard to reshort, but you know, this 21 and 8 day moving average has been controlling this trade. So if you're in it for the short term, you know, I would sell into this area. If you're in it as a macro investor and bought it on that day, hold it and then revisit come earnings time.
All right, everybody, have a great day trading. Good luck going into JP Morgan and Wells Fargo earnings tomorrow. Catch Scott at the end of the day as he wraps up the charts for us on Real Money Pro, Options Profits, and T3Live.com.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.